welcome to Insights from the PMs Desk. I'm Justin Plouffe, Deputy Chief Investment Officer for Global Credit at Carlyle. Today, I am welcoming back Lauren Basmadjian, the head of our global liquid credit business that manages over $53 billion. Welcome, Lauren.
Thanks for having me.
So 2024 is shaping up to be a very different year than 2023 was. What are some of the trends you saw in the first quarter in the liquid credit markets?
So the liquid credit markets have opened back up this year. We saw it with CLO liabilities tightening significantly. That led to record issuance in the first quarter. We've seen a lot of demand for bank loans, CLO liabilities. There's been a capitulation in the market about rates are going to remain higher for longer, so we want floating rate product. On the fundamental side, we've seen companies really focus on producing cash flow in this higher rate environment. So in the third quarter and fourth quarter of last year, we saw the highest percentage of our portfolio companies produce cash flow than we had seen in over 2 years, which is a little counterintuitive when you think about the higher rates that they're paying, but just shows how management teams are focused on executing and producing cash in this environment.
Now, there's been a lot written recently about the private credit markets and how they interact with the liquid credit markets. How do you see those two markets coming together?
So before, there were two markets for a borrower to choose from. You could do high yield or you could access leverage loans. And with the growth in private credit, there's a viable third option now, which has been really helpful and has provided stability in times when liquid loans were less stable. So there's access to financing at a higher cost, and a lot of borrowers chose that last year. There's actually been less movement, though, between the two markets. So last year, $20 billion moved out of the liquid market into the direct lending market. That's on a $1.4 trillion total market size, not that big of a percentage. This year, we're seeing the opposite, where $14 billion is moving from direct lending into BSL market, but half of that's been second liens, and those second liens happen to have first liens that are already in the liquid market.
So now, as you take a look out for the rest of 2024, what are some of the areas where you're the most excited to put money to work?
So there were really strong returns last year in both CLO equity and CLO BB. This year, I think both are still attractive, but for different reasons. CLO BBs are likely more of a coupon clipping return this year, but you still see coupons around 12%, which I would argue are really attractive for an asset class that has extremely low defaults, great Sharpe ratios compared to high yield, better cumulative returns compared to high yield, and higher coupons. And then on the CLO equity side, we're seeing a lot of demand come back as the liabilities have tightened and the arbitrage has increased, and the cash on cash is really approaching highs again, so we're finding value there as well.
Should be a lot to do this year in the liquid markets. Thank you so much, Lauren. Thanks to all of you for tuning in to Insights from the PM's Desk. We'll see you next time.